Good evening from where I am. It is currently 7:32, and yeah, that's my time. And during this trading day, I was asking myself so many questions. That was on Thursday. Yeah, Thursday. Yeah, I was asking myself many questions, and I didn't seem to find all the answers. But as I was doing my back testing, I did find something interesting, and here it is. I want you to look at this price point. We have that is at 4:55 p.m. and that is the closing time of the markets. And the open time, the pause time, and we opened at 6. So the first red line indicates the close, and the second line indicates the open at 6 p.m. And I was asking myself this question that why did in the market resume going higher after it took out the high, this high here? Why didn't it continue rallying higher? But after pondering and reviewing the markets and backtesting, I did find the answer. And this is NAS 100, and let's check it out together. So here is what actually happened. After the open, we had this fair value gap, and this fair value gap was the last presented fair value gap before the market closed. The bearish, yeah, the bearish fair value gap before the market closed. And after the market closed, the indication to go long for me was the market was first to take out the low at 29,530.4, then resume to take out the high. But after it opened, the first thing it did, it was to trade lower into that fair value gap and rally higher to take out the high at 20. That is at 20. The line isn't anchored correctly, but it is around 29,632.2. Yeah, so that is exactly where the market rallied to take the liquidity, and it didn't go higher to take out these highs at 29,645.0 to 650.0. It didn't. It reversed there immediately. And here are some of the reasons that I think the market did what it did. And number one is after taking out that high, here's exactly what ICT tutors. After taking out the high, we have the last presented fair value gap denoted in orange. So that was our last presented fair value gap. I guess you can see it. My screen keeps popping and doing like that. I don't know why. And if you can notice, we have a little imbalance in between. So I included that. And this is what actually happened. After we took out the high at 632.2, we had that fair value gap that was presented before the run on liquidity, the raid, before the raid. So I was replaying and watching the chart to see how it acted. I'm sorry, my chart keeps popping on and off like that, and it disappears for a while. I don't know why. And it has gone. Like, yeah, now it is back. Yeah. So I was watching and seeing how the price will react to it. And after we took out this low, let me show you the low I'm talking about. After we took out this low, we dropped further into that last presented fair value gap. You can see, yeah, we dropped into that fair value gap at this point. We dropped into that, and The bodies respectively, they didn't close below the consequent encroachment of that, the midpoint of that, yeah. And instead, we rallied back higher to a random point that is the last presented fair value gap before the raid. And what I was watching for a good entry. And let me remove the fib for some time. That will come back later. So after all that, this is what actually happened. That first presented, the last presented fair value gap was violated here, because if you're bullish, we want to see the price do what? We want to see the price respect the midpoint. After drop from this point, we came to this point here. Yeah, but you can see clearly the candles closed below the midpoint of that gap, and straight we went back into a very random level, here. This is the level I wanted to use. So I wanted to show you that ICT actually works. This is the level, this is the random level that market we're into. We can see here, maybe my anchoring of that is not perfect. You can do and check for yourselves as a part of backtesting. And currently now the market is closed. You can check up here, the market is currently closed. Yeah, it will open in 1 day and 5 hours. So this is just a review. Yeah, so here exactly is what happened. On that little time window that the market had closed, we dropped into that last presented fair value gap, that is bearish fair value gap, and randomly we did what? We came back into this level, this random level. Yeah, random ICT level. For you to know that ICT actually works, we came into this level, and here's what actually happened. I mean, look at the consequent. You look at the equilibrium of that week. We have 0.5 at we have 0.5 at sorry, my chart keeps doing like that. I don't know why. We have 0.5 at 29,587.7. CFDs are yeah, are not like futures, so I don't know if the prices are correct, but I'll confirm and anchor it correctly later. But this is for education purposes only. So we respected all the levels. We have the 0.875, we have the 0.75 level, we have the 0.625 level. We had nobody close above those levels, and in fact we dropped from the 0.5 level, that is 29,587.7, way down into the last presenting fair value gap. And I want to show you what actually happened there as a proof that ICT actually works. And here's the thing. Look at this point here. This is a random level here. Look at this point here. Look at that point there. That's a random level. That's the low of that last presented fair value gap. That was the last kiss of death, and that low of that fair value gap correctly or perfectly aligns with this fair value gap here. See what actually happened. I guess you can see what happened. At this point, we have anchoring from that market close gap. We have this level 1.5 at 29. That is at 29,559.3. Yeah, we had nobody close above that. And here's what ICT actually tells us, that when there is nobody close above, or we are looking for the premium and discount sensitivity. Here we are looking for the premium sensitivity. What actually happened here is that we had nobody close at level minus 1.5, and the market kept on tanking. going down and down until we came to this other random level here. We have this other random level here. We have after taking out this low, we have this fair value gap that is way just above it, this one here. But we have this another one here, and this one that I have highlighted here, it has been perfectly used. You see, it was used for the first time here, and you can check here on the chart that the midpoint of that fair value gap, there was nobody close above it. There was nobody close, and after so bye bye. There was nobody close above it. So here's what actually happened. Those levels that have been extrapolated on the chart as level -6 are from the previous are from the gap that closed, the market close. This gap denoted by red lines. So -6 level is a random level that is from the gap, the market close gap, the 1 hour window that the market usually closes. And if you look at this fair value gap, a bearish ICT student would clearly know that here, this gap, this fair value gap here, would serve as a second entry. Let me say a second entry. If we had missed the first entry, a second entry. So we had our trades back into it. The price action actually did drop down to this random level here, and then went back straight into that fair value gap, respecting and failing to meet the mid level of that, the 0.5%, the 0.5 level of that, only tapping the -6%, -6 level. And here is what actually happened, proving that ICT actually works. Let me show you here. You see this week? Yeah, this is what happened. This week failed to touch the low of that fair value gap. It failed. Why? Is that random? No, I don't think that is random. Why? Because all we do is that we forget to go into the charts and backtest clearly and do our analysis correctly. That is what actually messes with our heads. And I have realized that the more hours you spend studying ICT and actually backtesting, those are the things that will make you understand what the market actually does, what it does at that right time. And the first thing you gotta know is that time, then price. Know the time, then price. After knowing the time, you'll clearly understand what the price is doing. Go and learn about the macros that ICT usually teaches. Go look at his content bit by bit and you'll understand. Okay, so that was the first thing that I wanted to explain. That's the first part of it. And the second part of it is under analysis, and I'll drop it soon. And thank you for your time. And here's my proof that ICT actually works. From that gap, buy side raid, sell side raid, and all the gaps being mitigated and used correctly. Thank you for your time, and be blessed.